Ding, ding, ding. Hello. Okay. S&P 500. What the hell?
I don't know, man.
I'm pulling it up right now. But yeah, continue.
Yeah, like you told me today, and I looked it up, and like everything just at 2 p.m. everything just.
So, what is this market sell-off? Like, do we really understand what's going on here?
Maybe. I mean, people were saying that even during the pandemic, like S&P was hitting records, like record highs.
Yeah.
It's like a lot of people were like in the stock market and making investments and all that, but a lot of people were also saying that there's a bubble, and there's a correction coming.
I think it's inflated asset prices. I think that's what it is, and that's causing everything to look at this. Yeah. So stocks slump as treasury yields top 1.5%. So we're getting better returns on bonds
than we are on stocks.
Not than we are on stocks. I'm just saying like the bond yield is going up.
Oh, because obviously when stocks go down, people want to go into long fixed income investments like bonds.
Yeah. Nasdaq 100 falls towards correction as tech stocks lose favor. Hello, everyone, and welcome to today's session of Much Ado About Economics. We thought we'd start off. We were going to talk about Bitcoin today, and we will talk about Bitcoin. We're going to talk about blockchain. But I think it was important that we first address what's happening today, which is Thursday. Mm-hmm. We're looking at Bloomberg and Nasdaq and everything, and everyone is selling everything. Like, I think like tech stocks are obviously going down. I sold all my stocks today as fast as I could because I think that's important. I think like tomorrow you can buy and be smart to buy. But I think the reason that we're losing all these stocks are two. Treasury yields is number one of them, or bond yields, and asset prices are too inflated.
Yeah. So like I said, it's probably a correction.
What are the determinants of like treasury, like bond yields?
Bond yields?
Yeah.
Well, there's risk.
Okay. Bonds are
current economic, like what's it called? How do you say? Economic
conditions, right?
And
the interest rates.
And interest rates, yes.
Right?
So interest rates have been falling.
Mm-hmm.
That means the rate of discount is lower.
Yeah.
So that means whatever money you have in the future, it's valued more than it is if the interest rates were higher.
Yeah.
So of course people would rather have bonds because those are long-term fixed income. So
income.
Maybe you won't get a return on it, but you will buy it at a discount, and then you will get it back in like 10, 20, 30 years at a higher value.
Yeah, exactly. So like bonds are government issued securities. Think of it in that sense. Bonds are government issued securities.
Corporate too, but mostly government are the ones that are more popular.
And they can be 1 year, 2 year, 5 year, 10 year, 20 year bonds, and the yields on those change based on economic activity, based on interest rates and stability of an economy. And if you think about it this way, COVID vaccines are out.
Yeah.
Everyone's getting COVID vaccines. So COVID vaccines are going to boost our economy. But now I was having this argument with other people as well, where we were talking about how the economy will be within like 6 months from now. And they were like, well, we're going to go really back to normal because once the vaccine is out, everybody's going to be out looking for a job.
Mm-hmm.
Right? And with everybody wanting a job, and restaurants and everything can open again because everything will be back to normal. So then the economy will go exactly back to where it came from.
I mean, is it?
See, that's the thing. I don't really know. My opinion is that the economy is shrinking.
Well, actually, I read a report yesterday that day before, that 2020, the Canadian economy saw a bigger dip than the Great Depression.
Great Depression.
In the 60s. So
no, you mean 1920s? 1929, right?
Yeah.
1929. That is, if you guys can read, if somebody wants to read about that 1929 stock market crash, that is a very interesting read. I think you'll find that more interesting than the 2008 crash. Yeah. But continue.
And of course, it was worse than the 2008 crash too.
Yeah.
So I think that there was a graph that they showed that 2008, there was like a 3.2% dip.
Mm-hmm.
This in 2020, it was like 5.4%.
Yeah.
Which is like 5% doesn't sound a lot, but if you look at how big the Canadian GDP is, let me show you what the Canadian GDP is. The Canadian GDP is $1.7 trillion US. So if you take 5% of that, you can imagine how big that amount is.
That is a huge amount. Like we're talking about, like still in the billions. If you think about it that way, you're still in the billions there.
Yeah, you're in billions. So like Canada lost billions of dollars.
Okay, basically it's 1.73, right? So it'll probably be like 0.15 trillion.
Yeah, so about 150 billion.
150 billion.
Yeah.
Damn.
Quick maths. Yeah, that's the thing. Like 5%. But like it doesn't feel like it because, I mean, it wasn't like there was something wrong. Something went down. It was just we went into lockdown and people lost jobs.
Yeah.
So like the
213,000 jobs to be specific.
Yeah. And that's why you can say that, like the economy went down because the economy just slowed down.
Yeah.
But they're saying that at the end, the last 2 or so quarters of 2020 looked pretty good.
Yeah.
Because there's a lot of like optimism now since the vaccine is out.
But remember, that's when the lockdown ended. Then the lockdown started again when 2021 came around. Remember?
That's true. But now the vaccines are here. So people are more optimistic.
Yeah, I agree.
And of course, it's also Soyb. So I feel like if it wasn't for Soyb, it would have been a lot worse.
I think because the government has been providing stimulus into the economy and providing money into the economy, I think that has been very beneficial for the economy to stay afloat to an extent.
Like it was damage control.
Yeah.
Yeah. Because I mean, there's no work, so
it was when you put like floaties on a kid in a pool.
Yeah.
In a way.
That meme? Yeah, it's like you have like parents with one kid and like wee, and then there's another kid like in the floaty but still drowning, like. And then at the bottom of the ocean there's like a skeleton on the chair.
Oh no. Okay.
But yeah, so as you said, we're gonna be talking about cryptocurrency today. So
yeah. So, okay, let's talk about what cryptocurrency is. Cryptocurrency is based off one thing, blockchain. What is blockchain? Blockchain essentially is, I'm going to try and explain it as simple as possible. The way blockchain works is it's just basically a series of linked nodes or wallets, and each wallet has its own processing power to be able to send money from one node to the other, or from one wallet to another. Yeah. So if I wanted to send him money, then I would find his wallet address or his node address and send money from my wallet to his wallet, and my wallet and his wallet would do the processing to be able to send the money across.
And like to compare, let's talk about like a bank transaction. So if you and I want to do a bank transaction,
if I wanted to wire transfer money to you,
I have to take the money from my account to the bank,
from the bank
to you.
Yeah, so like it'll go through a central processing system.
Exactly.
Right?
So like in normal transaction, there's like a central location where everything goes.
Yep.
And then goes to wherever it needs to go.
Exactly.
But in this case of blockchain, I say like you said, it's between you and me, and it'll stay between you and me. So
it'll stay between us.
Transaction ID and like all the information on transactions will be between our own wallets.
Exactly. Yeah. So now some benefits about using blockchain. It's more transparent. Transparent in the sense that all the information through blockchain is completely the same. In the sense that to send money from me to him in different cryptocurrencies, it doesn't have to be the same cryptocurrency, but to be able to send money from me to him or to anybody else, I can pick person Y who's in the corner, right? To send money to them is very simple because the documentation needed to send the money is all the same. Right? So it doesn't really matter.
Yeah, you just
that's
need
the
the
first
ID,
thing.
The wallet ID.
The second is enhanced security in the sense that blockchain is immutable. Immutable means it cannot be changed. Yeah. And it will always exist.
So once the transaction has occurred, it cannot be reversed. You have to do a transaction in the opposite direction.
Exactly.
To cancel it out. So for example, if I by mistake sent him 10 Bitcoin, which is a lot of money.
That's a lot of money.
And I'm just like, oh no, that's a mistake. I wasn't supposed to. He has to send it to me back. I can't like stop it, cancel it, or reverse it. It's
exactly
there, and in the history, it stays forever. And that is a feature of a distributed ledger.
That is what distributed ledger means.
Yes.
So a ledger is basically a place where the list of transactions are written down.
Yeah.
A distributed ledger or decentralized ledger, I think is a better word for it. Decentralized means it's not in a central point. A decentralized ledger means that each wallet has its own, has its own ledger. So any transactions that happen in a wallet are written down within that wallet and the wallet that is being received to and can never be removed or changed.
Yeah.
And the other thing is you don't require banks after that, right? Because your wallet can do all the processing you require.
So you remove the middleman.
You remove the middleman, which is the bank.
Yeah.
Okay.
So like also like if you there might also be like bank fees. Like for example, like if you have a certain type of account with the bank and you want to like e-transfer money, like you either have like you have to like pay an annual fee or you have a certain limitation of how much
money you can transfer.
Yeah. So in that case, you don't really have that kind of restriction because there's no middleman to work with.
Now, when it comes to blockchain, I think then we can look at some disadvantages of blockchain as well, because that's also important to understand when you're actually looking at something. You can't just focus on its advantages. Blockchain disadvantages. Okay, it's not a distributed computing system. By the way, all the links that we're using will put in the description below so that everybody can read up what we're reading as well and what we understand.
Yeah. We're at the end of the day, we're students, so we have to cite our sources.
Yes.
But no, it's not going to be an APA. We're just going to put the links in and you can check them out.
Point. Blockchain is not a distributed computing system, and what this basically means is that you need each wallet or each node to function at full capacity. Because if it doesn't function, then you get onto the next point, which is scalability. The bigger you get it, the more processing power is required from each wallet. Yeah. So everybody requires a strong computer or a strong device to be able to process that. Now, you've heard of stuff like hardware wallets, and hardware wallets will not do any processing. They'll just hold the Bitcoin, and the Bitcoin or any cryptocurrency is written down, like all the ledgers are there with the amounts that you hold. Okay, so it should be like
it just
indicates exactly. And some of them can consume too much energy in the sense that it will need processing power to do. And then you have those issues of security. If somebody hacks your node, they can take all your money.
Yeah. Or like if they know your password.
Exactly.
Did you hear about the guy who forgot his password?
Yeah, for Bitcoin. And he's got like 20 Bitcoin or something like that.
$2 million or something.
Jeez. Like, could you imagine that happening?
He bought it like 5-6 years ago. Like I saw a video one time. It's just like this guy's like, oh my gosh, Bitcoin hit $111. How much is it right now? Like 20K?
Bitcoin?
Yeah.
60?
Oh my god. 60K.
Bitcoin is almost is hitting $60,000, and it's been going up.
There was a time when one Bitcoin was $111, and now one Bitcoin is worth $60,000.
Yeah.
And that man just lost all of it. And like he had to come to terms. He had like 10 attempts in the past, and he's like, I don't want to come to terms with that.
I've lost. And in a way, that really means that Bitcoin is lost from the history of Bitcoin.
So like it's not even like in the supply anymore. Like it's stuck in that wallet forever.
Exactly. Another disadvantage that comes up here is how old can cryptocurrencies be? Like the oldest we know is Bitcoin. But then you can have lots of cryptocurrencies. Like anybody, you can make a cryptocurrency right now. Go make a cryptocurrency. You can do it. Like Dogecoin. Dogecoin was a joke.
Yeah, it was
legit started as a joke.
Yeah.
Right? But you have Bitcoin, you have Ethers, you have Ripple, and all of these are used for different purposes, and they're written with different coding, and you can mine them, which is basically generate them in different ways. But which form of cryptocurrency is the best cryptocurrency? There's no determination of that. Like we don't know that.
We don't know. It's subjective. Like it depends on what you use the currency for. Like are you using it as a medium of exchange where you want to use it as a currency, or are you using it as an asset or commodity to hold on to and speculate?
Yeah.
And hope that the value rises.
Right. And then there's the issue of not being able to convert from one cryptocurrency to the other. Like if you wanted to go from, for example, Litecoin to Bitcoin, you'd have to sell your Litecoin to an exchange, which would convert that into Bitcoin by buying Bitcoin at the Bitcoin price and then selling you Bitcoin at a slightly higher price so that exchange makes money.
So wait, so I thought it would just be like you turn it into cash and then use the cash to buy the Bitcoin.
In a way.
Litecoin
is sold into the Litecoin market.
Yeah.
It's like a stock. Think of it like a stock. Litecoin is sold into the Litecoin market.
Yeah.
Okay. Then the cash you get from that, you buy Bitcoin.
Yeah.
Or the exchange will buy Bitcoin. And then that Bitcoin is sold to you at a slightly higher price.
Yeah.
So they'll make that money, and they'll make that middleman money.
Yeah.
But you can't convert from one currency to the other.
Yeah.
Without having to go through a lot of things.
Yeah.
So that's in a way that's blockchain in a nutshell. But let's continue with what cryptocurrency really is.
Yeah. So how I understand cryptocurrency right now is think of it as like you know how you get like store credit, right? Like you get like a gift card for H&M.
Yeah.
All right. Let's say it's worth $100.
Yeah.
Right. So you bought it for $100. It has $100 in it, and you can buy $100 worth of stuff. Now, the thing with crypto is you can buy that gift card, that token, for $100, but tomorrow it could be worth anywhere between 0 to $1 million.
Yeah.
So like that, there's a certain sense of volatility to it.
There is a huge volatility. And the thing about crypto is it's not backed by any security.
That's what I was gonna say.
Cash
There's no
is
base.
backed by something. Stocks are backed by in this case wood, but brick and mortar.
Yeah. So like what? So yeah. So the difference I see between crypto and other currencies is there's no base. Like for example, back in the day in the 50s and 60s, the US dollar used to be pegged to the gold.
To gold, yeah. And then
How-
in 72, I think it was, there was the Bretton Woods Agreement,
Yes.
which took US dollar off the gold.
Yeah. And like even though like US dollar kind of doesn't really have a base, but I mean there's a US economy that's
That it's based off in a way.
and the government can control it. So
Mhm.
like there's no inflation, the value is so like there's menu costs. So if there's a higher rate of inflation, then prices are changing every single day.
Yep.
So you have to like change the menu every time. for a
Exactly.
restaurant. So like there's that sense, there's that issue of like Bitcoin doesn't have that kind of thing. Like the only thing it's based off of is clout, like how famous
Yeah.
it is and how many
Like-
people
like
are
hype.
buying it. It's just hype,
Right?
and that's what's scary. That's why like I personally never dabbled in cryptocurrency. I read about it, but I was always like, it's not based off any, like today it's worth so much. Tomorrow, if everyone decides to sell it,
Mm-hmm.
it's worth nothing.
Yeah, that's true. But the other thing with cryptocurrency is it's accessible.
Yeah.
Anyone with an internet connection can buy and sell cryptocurrency. Well, right now, obviously, you need a bank account to be able to buy and sell cryptocurrency, which is. But if cryptocurrency was
I thought you just need a wallet though now.
no, in the sense that like you need cash to get
Yeah.
cryptocurrency,
Yeah.
unless you can mine your own cryptocurrency,
Yeah.
right? So basically, anybody who is anybody, if you have a computer, you can download software and mine cryptocurrency. So you can create your own because cryptocurrency is based off algorithms, and you can basically just run the algorithm.
Yeah.
And as your computer solves these problems, these algorithmic mathematical equations, it will generate more and more of that cryptocurrency, right? And that's how you get cryptocurrency. So if you wanted to go get Bitcoin, or if you want to make your own, let's say you want to get your own Ripple, okay, you will get the software that allows you to mine Ripple, get your computer to run it, and that's Ripple for you,
Yeah.
right? And then you just pump out Ripple. But like we're saying, that there's no asset, like there's nothing solid that's
Like
backing
the
your security.
Crypto in itself is the asset.
Yeah.
And like that's the issue. Like a lot of people don't know how to classify it as. Like
Yeah.
some governments, some states in the US classify it as currency.
Mm-hmm.
Others do it as an asset, and some
Mhm.
do it as commodities.
Yep.
And some people are saying that it's going to replace gold.
Okay.
So what does that mean is that a lot of times if you notice the trends in the market, when the economy goes down, people buy gold.
Yeah.
Because it's like their sense of safety that, okay, if anything goes wrong, gold still has its value.
Gold has
I
its
can
value.
always rely on that.
Yep.
And when the economy goes up, people sell their gold
Mhm.
or buy less gold.
Yeah.
So it goes down. So that it has like an inverse relationship with the market. So people think that crypto can replace that.
Right. Like, okay, but if then you have the question of the future of crypto, as in if crypto is not backed by an asset, if crypto is just zeros and ones,
Yeah.
right? If
Scary.
crypto is just zeros and ones, why are companies like Tesla focusing on buying Bitcoin?
I think it has a lot to do with like killing the middleman.
Okay.
I feel like people see that as the biggest advantage there is that there's no fees related to it. You don't have to like right now you do need a bank account because you need to get the money to buy the Bitcoin. But let's say if you're being paid in Bitcoin and you're buying stuff in Bitcoin, you don't need a bank.
Yeah. You just need your wallet.
And I was reading this as well, that if you look at like developing countries,
Mm-hmm.
their banking systems are not as strong as the Western world.
Yep.
Right. So of course there's that little issue there that sometimes it takes longer for money to be carried around. So if they have Bitcoin and internet connection, that's a lot easier to work with.
I agree.
But at the end of the day, it still doesn't solve the issue. Like, what does cryptocurrency need to become a mainstream currency in the long run?
That's a very pertinent question.
Yeah, because all it is right now is if people are using it, it has value. But even that, if more people use it, the volatility is crazy. Maybe I think the thing is we also consider cryptocurrency as a value against cash, right? Because the
the currency that we are used to right now in our day and age is cash.
Yeah.
Right?
Cash is
So we need to look at cryptocurrency from the sense that cryptocurrency is the only currency that we use. Okay, so that's the first thing. I think that's number one that is key. So everybody has to change their mindset from cash to cryptocurrency.
I mean, people are still stuck on gold.
Yeah,
Like
that's true.
Like they have to go from gold to cash to Bitcoin. Like there's a whole
But
generation gap.
See, the thing is, what we could, and this is to my second point. The second point that I'm going to say is that I think that to be able to get cryptocurrency mainstream is to limit the supply of cryptocurrency. The only way to get cryptocurrency is to be able to, like, you can earn cryptocurrency, but there should be a limit.
So it has to be regulated.
It not regulated. Okay, and I don't mean regulated in the sense like by a bank. I mean by software. For example, Bitcoin. Let's say that in the world you can, or okay, let's come up with your own cryptocurrency. Come up with a name.
Tablecoin.
Tablecoin.
Yeah.
Okay. Tablecoin.
Yeah.
How about Jedi coin?
Jedi coin.
Jedi coin.
Jedi coin.
Jedi coin. Okay.
Yeah.
So say you come up with Jedi coin.
Yeah.
Okay. And you say that that Jedi coin is going to be the new currency of now. Jedi coin, okay, is a centralized currency. It's a decentralized currency, but you can only have 1 trillion Jedi coin.
Not more.
Not more than 1 trillion Jedi coin.
Okay.
Now it means that Jedi coin is valuable.
Yeah.
Because you cannot have an infinite number of Jedi coin.
Yeah.
It's the same way cash. It's the same way cash is, right? Unless the government, like even if the government printed out money,
it would lose value.
It would lose value.
Yeah.
Right?
So it must have a certain amount. It has to have a money supply and a certain amount.
Yeah.
To maintain the value.
Right? And you can and you can define within the algorithm of Jedi coin that there is only going to be a limit. Like Jedi coin cannot be more than this. And any Jedi coin that is not validated over this is fake and therefore cannot be used.
Yeah.
Okay? Yeah. So now you set a value for Jedi coin. That means now you can pay people in Jedi coin. Like, hey, you know what? You are a CFO of XYZ company.
Yeah.
Company has a turnover of, 12 Jedi coin. Okay? You are paid 0.7 Jedi coin. That's your salary yearly.
Yeah.
Okay? So now what you've done in that experiment is quite simply that you have made something that is not valuable. Now it's got a value. And if people,
cap on it.
Exactly, now people are going to buy and sell in it, that's going to strengthen that value.
But what if they're like more? So now that's the thing. Like, let's say if we did do that and more people got into it, so you have to change it, right? I mean, what you could do is if you have a software, what you would try to do is try to maintain the value as much as possible by changing the amount, the limit, the cap that you can have.
So say that. I say that everybody starts using it.
Yeah.
What do you think the money supply in the world is probably? Let's say the money supply in the world is probably like $1 trillion. No, sorry. Let's put it at $100 trillion.
Yeah.
$100 trillion is the world's money supply.
Yeah. How much money everyone has in the world?
Therefore, you pick the currency. $1 trillion. So that means, let's say that $1 trillion equals $100 trillion equals 1 trillion Jedi coin. Okay. So that means if you earn $800,000 a year, you earn 8,000 Jedi coin a year. Okay.
Yeah. And that's like the currency rate.
That's your currency. So you will sell when you spend, your Jedi coin goes into the market. Yeah. It goes into suppliers. It goes back out as your salary.
Yeah.
And it's the same cycle of money. Remember the same thing. It's the same. It's the rotation of cycle of money.
You make a very good point there, but the only issue I would see is who's setting that cap. Like, yeah, there's a software and all of that, but you still have to set it. Like, who's gonna set it? Is it gonna be the creator of that currency? Is it gonna be a particular government that the jurisdiction was built in? Like, there's so many questions, but at the end of the day, I do see your point is that capping the supply of it will give it some stability in its value. And I feel like that is one of the most important things. That's one of the biggest issues with crypto being a currency right now. Like right now, all I see is that as a highly speculative asset. That's how I see it as.
Right. Like, I have I see. Okay. First thing is, I think that Tesla, like Elon Musk is a visionary in the sense that he really he pushed through with this EV game right now with Tesla. Like he really pushed the idea of getting electric cars accessible for everyone. Now I'm not saying that electric cars did not exist before Tesla.
Yeah.
A lot of companies have made electric cars, and if you really want us to go in that debate, put a comment in, type in a comment, and we can run through that debate with you guys.
Yeah.
Who really made the first electric car? But Elon Musk is a visionary, and he came up with, and him buying Bitcoin is, in a way, like saying that, you know what, guys, Bitcoin is going to be here. Blockchain and cryptocurrencies are here to last, and we should start to adapt to it.
We should adapt to it. Yeah, that makes sense.
And the benefit of using cryptocurrency just improves the accessibility, and just means that it basically reduces the ability to fraud, unless somebody hacked your system.
Yeah, it's a lot. It seems a lot safer.
Yeah.
In that case, there's a lot of security in it.
Mm-hmm.
It's decentralized, but at the end of the day, let's do some econ here. So there's a definition of money, and there are 3 criteria that have to be met in order for it to be claimed as money.
Yeah.
First is medium of exchange.
Medium of exchange.
Which I believe is 100% okay, because that's what it's mainly used
That's
for.
so that's the point of blockchain.
So medium of exchange means that you can use it to buy stuff.
Yep.
So I can use blockchains to buy this bottle. Bitcoin to buy this bottle.
Let's stick with Jedi coin.
I can use Jedi coin to buy this bottle.
I can use Jedi coin to buy my laptop. I can use Jedi coin. The point is, you can use your cryptocurrency to buy and sell anything you need.
So it's a medium of exchange.
Yeah.
Next is unit of account.
Yeah.
Which is basically that you can count it, divide it, and you can measure things using it.
Right.
So let's say, for example, I made a profit of 5 Jedi coins today or this year, right? So that's what unit of account is. Lastly, which I feel like is the most disputed, is storage of value, meaning that it has a value. Now, the issue with this is volatility.
Yeah.
And I feel like that's where you have to draw the line. Okay, even though it's very, very volatile, can it still be counted as money?
See, this is where I dispute. The idea is, I think the idea should be more that if you change the mindset from using cash as a currency to using Jedi coin as a currency, then Jedi coin itself will be the medium of exchange. There will be nothing to compare to. You can't compare cash to cash.
So I understand what you're doing here. So what you're doing here is the fundamental issue that I'm having right now is, when I look at Bitcoin, I'm looking at it in terms of cash.
Exactly.
I'm looking at it in terms of the US dollar.
Yeah.
So you could get the example of the Zimbabwe dollar before they moved to US dollar.
Yeah.
Is that they were just very volatile, and they were just they had a really high rate of inflation.
Yeah.
So the value just went boom, 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 boom. I mean, even though it's going in one direction, it's still very volatile.
Yeah.
That's high volatility.
Exactly. Because it was changing its price very rapidly.
So I understand what you mean is that, okay, so we need to stop you looking at it in terms of cash and just look at it on its own.
Exactly. So you take Jedi coin on its own,
Yeah.
then you limit the value of Jedi coin. So you set a hard cap. Now the hard cap can be defined in many ways. It can be software based. Somebody could define the hard cap. It could be artificial intelligence based. That might actually be that might not be a bad idea if you can integrate the artificial intelligence into Bitcoin Jedi coin.
It's not too far in the future. Yeah.
Yeah. So you take this concept, you assign a value to each Jedi coin. Now Jedi coin being, it's not like physical currency, it's digital currency, which technically money is in any ways, right? If you think about it, when you put money into the bank, it's not really, your physical cash isn't in the bank. The bank just knows that you have a value of that cash in your account.
And you can't access it immediately either.
Yeah. When they've taken that cash and they've put it for other uses, like loaning out purposes, right? But that cash...
But you can still take it out and put it in a mattress, right? You can't do that with cryptocurrency.
Yeah, but what you can actually do is you can create a new wallet, because you can have unlimited wallets. You can create a new wallet, take that, put it in a USB stick that is a wallet, and stiff that under your mattress. That's basically the same thing.
Oh yeah, true. Because you can't copy it.
Yeah,
a lot of I'm sure a lot of people are just thinking, why can't you just copy paste the code?
You can't, because that's not the way it works. Because it's different wallets. It's a different ledger.
And the Bitcoin, each coin has a particular
address
code. Yeah. Unique address.
Yeah.
So when you read the address, you know it's this very Bitcoin that was mined and this long ago.
Exactly.
And all this, and it's been
That's
here.
the concept of a decentralized ledger. So you know where all the cash is going.
Yeah.
So now back to the point is, you take Jedi coin.
Yeah.
Jedi coin is now your means of purchase, your means of transactions.
Yeah.
Number one. Number two, you put a hard cap on Jedi coin. So now it's got a value because it is valuable, because it's rare. Quotation marks. It's like a car. Like if you were to mass produce a car, it'll depreciate. But if you were to limit the production of your car to 500 units for the whole world, then your car goes up in value. Think of the LaFerrari. Think of the Porsche 918. Think of the McLaren P1. They were being sold at just under $1 million, and now they're worth over $3 million because they were all rare.
You even look at like sneakers. Like they only make a certain amount of sneakers.
Yeah, like Yeezys.
And even you look at Supreme.
Yeah.
But again, it's hype. Like
it's hype.
At the end of the day, it's still hype. Like if I put a cap on Jedi coin, who cares? What if no one wants it?
The thing is, everybody has to take on, like, it's the same way the US dollar is so hyped.
Yeah.
Right? You have to get that same hype and that same. So you have to remove the stigma between cryptocurrency being something connected to cash to cryptocurrency being its own currency.
Yeah.
Then you put a cap and then you distribute that currency. So now all of that money flows. And you can apply interest rates to cryptocurrency. You can apply money supply to cryptocurrency. You can, in a way, print more money, which is basically mine more Jedi coin.
Yeah.
If you need to.
If you have like a central, like
right,
a supercomputer,
and you can set it up in such a way that only a certain regulatory body can mine Jedi coin.
Yeah.
Have a certain key that allows you to mine Jedi coin.
But wouldn't that also still increase like inequality and stuff? Like, I don't know if it's a good medium of exchange, but I feel like it can still widen the gap of inequality for people who are like, for example, let's say we're in between the transition, right? And I mean, regardless of whether we cap or not, it will still be relatively very volatile because like more people are getting into it.
Yeah.
In the transition, in the transition from going from cash to, let's say, Jedi coin, people are getting more and more interested. More people are joining, so of course the value is going up.
Yeah.
So let's say I've waited. Let's say I ended up waiting. I was like, no, I'm still gonna wait, and I have $100,000. I'm in a mess now because, like, for example, let's say you already invested in, so you transitioned over to Jedi coin a year ago. Yeah. And the value is going up and up and up, so you got wealthier. Yeah. And someone like me who decided to wait a year, I'm gonna be less wealthy.
That's true.
But we both started with $100,000.
That's true.
So like I feel like
I think to be able to do that is that everybody will have to sell their cash and put it directly into Jedi coin and get the equivalent value. And that has to be done in a go, like, at one time. Simultaneously, everybody switches from cash to Jedi coin.
See, not in theory, yeah, but in practice, that's impossible.
That is almost impossible.
Because some people are just gonna say no. They're just like, some people are still gonna be like, no, gold is like, I can't hold the currency. Like some people still prefer cash and gold.
Here's a flash drive.
Here's a flash drive. It's worth $100,000. What, a flash drive? No, like,
exactly.
No.
I think that is a valid point as well.
There's a big gap in generation. There's a big gap in education. So I feel like even today, like, cryptocurrency can have a bright future if a lot of things happen. Like, for example, like maybe AI controlling the value, the capping the supply.
Of course.
But at the end of the day, it's like, it's up to the people if they're going to participate. Like, it takes two to tango. So you can mess around with the supply, but demand has to be there.
The demand has to be there.
And demand has to be there substantially enough to be able to get a proper stable price.
I agree.
Right?
I agree.
So, that was our discussion on cryptocurrency.
That is our discussion on cryptocurrency. I think that was a very fruitful discussion.
Yeah.
I think that opened up... I think that those were some pretty decent ideas.
Yeah. Like, there's still many questions, but I feel like that's a good way to end. Like, maybe we could do another part 2.
If everybody's interested, if you guys have any questions on cryptocurrency and you guys want us to discuss some of them, shoot them in the chat.
Yeah. You can put them in the comments. You can DM us on our Instagram account.
Yeah. And at MAA Economics. It's up there.
Yeah. So, hope you guys enjoyed. And hope you like the little change of scene, a little afternoon thing.
Yes. I agree. And we'll see you back here same time next week.
Yeah. Take care.
Take care.